Hello traders, it's 8 a.m. Chicago time on the 19th of April 2018. It's Thursday. We just received Philly Fed and initial claims just now. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As I said about a half hour ago, we got the two key numbers today. We still get leading index at 10 for March, looking for 0.3%, and that's pretty much it for the day. Looking at the overall stance of the market, risk is off this morning. The S&P keeps pushing the low. We're through 2,700 key area here as we continue to spill lower. Market's got a bit of an issue continuing higher, and I'll show you what potentially could be causing that. In any case, everything is off. The only thing that's positive today is crude. Crude tearing up to $69.02, up 0.8% after yesterday's rally. Crude seems determined to get to the Saudi target of $80 a barrel soon. Also, the British pound and the Euro FX are positive. Interestingly, the U.S. bond is off 29 ticks this morning. It is at the lowest. It's basically the laggard this morning, followed by the NASDAQ down 32 points. Just a really odd setup here to me. But overall, clearly the market is taking risk off the table, and not sure where that money's going yet, but it looks that way. Yesterday, the expectations. So, continued expectation for higher, and we got that. The primary scenario is we open. The open at the time of our conversation yesterday was 27.15 or so, just above the 27.1375 high of the previous day. The expectations we would likely drop down into 27.0850, potentially down to the point of control 27.0675, and then I'm looking for a push higher into 18 quarter, which is the MC point of control for the 3 days, the 19th till the 21st, with a target at 21.50. We didn't quite get the target yesterday. We stopped at 18. The MC point of control proved too powerful for this thing to push through. But we did get the pullback. The pullback was deeper. We got all the way down to the overnight low. To basically the tick, which is also a low volume node, and then we bounced up from there. Interesting times. The secondary scenario is that it would not push in at all, and we would squeeze up to 21.50, spend a good portion of the day there before pushing to 27.26, 27.27. By the way, 27.27, you want to mark that. Expecting a fair amount of resistance up there on the first test. Here's what actually happened. There it is. We ended up opening a little lower. We dropped to 27.1175 and pushed up out of the range, and then squeezed into that 27.0375. That's the low of the day, which also happened to be the overnight low, taking out the overnight low stat. I expected the overnight high to be taken yesterday early, but it didn't. And then here's the impulse up. And then the expectation is we would tangle up here at 21.50 and then continue higher, and it just could not do that. I mean, yesterday it just really struggled. Overall, the delta worked with price. So it seemed to be going in sync here. The expectation is it would consolidate and potentially give us a nice squeeze on the close at 27.21. But overall, the market had really poor volume, and range is very, very quickly collapsing. So let's look at that real quick. Let me show you my composite chart. This is a very important chart just to keep the big picture in mind. Each bar here represents one trading day in the RTH. These are the 3 days that I talked about. Their point of control is 18.25. The high yesterday is 18. We're pushing into this high volume node right here and are getting tangled up. And so overall, we've made pretty good progress pushing up. We've left a gap behind day before yesterday, but look at this. Look at how the range is moving as we push higher. The range is just dropping very, very quickly. Yesterday's range was very poor relative to recent action. We got 14.25 points on less than common volume. The most common volume for this product since 2013 is 1 million contracts in the RTH session. Yesterday, I think we got 838,000. It's a fair amount off. There's really no, there's no reason or excuse for that to happen. It's just the market's rallying back up, and it seems like everybody's just sitting on their hands. We have a couple of risks out there still. The Syria issue is continuing to linger. We don't know what's likely to take place as a retaliation from Russia and so on the Syria bombardment last weekend. But the biggest risk, and it's coming across from various central bank speakers, is this trade war, this persistent uncertainty that impacts companies directly. And so the market's floating up, but it's doing so on relatively low volume. Okay, let's get rid of this. It's not needed. So that's what things look like. Now, moving this profile forward, let's shift this profile forward to see what we've done since the last swing high. Here we go. Last swing high, the all-time high, 28.80 and you can see much more clearly what's happening here. We've yesterday moved into this high volume price right here, which is at 27.20, 27.20 we also have the 27.18 just beneath it, which is what we hit yesterday, 27.18 we've made it through the low volume node right in there. So we've tangled quite a bit down here, and our point of control is down there. It's 26.57. We left that point of control behind us, and we've moved away, and we have arrived at the next station where this train is set to stop or turn, or at least slow down, and we're definitely slowing down, and we're starting to shift lower. So to me, the bias today, based on yesterday's action and the pattern that was created, we're likely to retest this low volume node beneath us at 26.90 next, and start filling in the gap that was beneath us. The next key support area is 26.74. The 26.74 area, and that's likely to be the next stop on the way down. So we're likely to shift down here, consolidate, and then make the next move, whatever that is, depending on what our wonderful leaders decide. And so that's how things are shaping up in the big picture. Don't forget that we're trading. The market moves from balance to imbalance, balance to imbalance, and so on. And so we've shifted from one big balance area, big acceptance area, and have stalled ahead of the next. That is very normal market behavior that I've talked about quite a bit. That's just part of the auction. Okay, looking at the overnight session, the overnight session seems to be unable to maintain higher prices. So we opened up higher than yesterday's close. We spent a good portion of the session above yesterday's close. Inventory was long. And then at approximately 1 a.m. Chicago time, or when the Eurozone opened, we have this big drop, and then we just fall below the mid of the overnight session, and we maintain that, and we just slipped below just now. So we've pushed through the century figure here at 2,700, and we've got pretty low volume given the movement. The movement that we have only 131,000 contracts. You would think there would be more. The overnight session having a range of 2713 to 2698, about 15 points. That's in line with what we would consider to be normal. And so overall, the overnight session is tipping its hand. Looking at the profile shape is very poor high, very blunt high. You can see there was a lot of volume that occurred at the high, but it did not break through. So we need to keep an eye on that. And then from there, there's no consensus really on prices. The market's just continuously exploring prices equally across the board. So to me, the overnight session is saying, is indicating that there's a high probability that the auction lower is not complete, that it has not found the buyers it's seeking. Overall, what's the problem here with this rally? The biggest drag on this rally is the financials. The big players, Goldman Sachs, JP Morgan, Wells Fargo, Bank of America, and so on, have all announced. The market's paying attention to the quarterly earnings. They've all announced, they've all shown pretty good outcomes for the last quarter. But still, the XLF, it keeps dragging. See, it's staying, it's continuously on the low end of my cash tracking, my underlying sector tracking chart. It's just continuously dragging. The next thing that's dragging is the healthcare sector, and it's just not able to play with us. The transports have been strong. Yesterday, transports were leading the pack until crude oil took over up here. But overall, transports took off on earnings as well and maintained higher. And so overall, the market is behaving like it is just running out of steam to the long side. That combined with, everyone watching whatever they watch to show that it has made multiple runs up on very little pullbacks here on these gaps. We've got a gap in range beneath us from Monday. We've got a gap out of range, so we've left a gap zone on Tuesday, and so on. It's run a little bit high, so it looks to me like the overall view today is we're likely to open. What is going on here? We're likely to open at the century figure here. I'm expecting a response. I'm expecting it to get tangled up in the 2705, but overall, I'm looking for an impulse down and for the market to start moving. It's making its way down to 2692 for the gap, and then I'm looking for a close of 2690 at some point today. 2690. I can't write on this screen. You try to write with the mouse. So that's my primary scenario. I'm looking for this to bounce a little bit higher before it starts to roll over. Okay. So the other thing is tomorrow is options expiration, right? So we have the third Friday of the month, the monthly options, and that's also likely to be in play here at the 2700, like Lord Vortex is pointing out. That's potentially another area that's another thing here, another factor that's likely to keep us pegged around this 2700. Would love to see us sell off. Would love to see us clean up these gap areas to form a base for the next move, whatever that side is. But that's the main scenario for today. It may push into it may push higher. It has room all the way up to 2708, but overall, I'm looking for the market to respond and sell or sell, and that's the secondary scenario here. Is that hello? What is going on here? I'm not able to clear the screen. Let's see how we can clear the screen here. Clear. All right. The secondary scenario is we open, we pull back small, and then we have our push immediately. Not as likely as the potential for a push up before we start moving down. The range is not likely to be very wide today. I'm looking for about 12 to 16 points for the full range. It's expected to expand over yesterday's because yesterday was a rally range. But overall, I'm not looking for 20, 25 points. So that's the secondary scenario. The third scenario, and why isn't this working? The third scenario is an open auction out of range, tests lower, dips into the 2692 area below the Tuesday low, and then we get an impulse up, and then we see these prices as cheap, and we start to move back to 2708. 2708 as buyers are found at these prices, and we start to move back up. Overall, it's a good idea to just let the market figure out what it wants to do early on, and to pick your spots. How am I picking my spots? I'm letting it decide what it wants to do. I'm finding that I'm scaling in a lot. I'm breaking up trades a lot. Just because it's not the volatility's been higher than normal, so I have to cut down on the size. I have to spread my trades out, but that is collapsing. And I'm seeing conflicting signs of what it wants to do. But for now, clearly, we could not take out 27.18 and a quarter. That point of control. That's the biggest thing. So yesterday's auction is very, very clear. We just could not get any participation to the upside on that. And so I'm looking to sell any push higher. It's that simple. And where do you sell the pushes higher? It could turn at 2703. It could turn at 2708, 2705. I don't know. So that's why I have to spread those entries out, and that's why order flow is really important. I want to see what's being offered versus what is lifting that offer. Is it iceberging in? Is it just lifting, testing, and falling? Are there collisions? That sort of stuff. It's just hard for me to localize it. With ranges compressing, it becomes more and more important to read the flow to get the most out of your trades, as opposed to a market that's covering 40 points, let's say, and okay, you got in wrong and puked out a trade at 10-point loss, but you still have another 30 or 40 points to make that up if you jump back onto the trade and not get attached to the outcome of the last one. So overall, as the range compresses, we start to have to be more accurate or more patient. So that's that. The profile yesterday left us with what looks like a double distribution, but overall it is balanced. The value area from yesterday of 27.1650 to 27.1050 is valid. So I'm selling against that value area if the market pushes up there. Okay, I'll leave you with those thoughts. Convergent traders, we have our study hall session today at 4:30 Eastern. We're covering stock zones. Coming up with your own. Good luck.